Neeraj, Seth, founder and CIO at 3R Investment Managers, and Arvind Sanger, managing partner at Geosphere Capital Management, is joining us to talk about some of these fast-moving developments and where that leaves India in the Indian market. Gentlemen, thank you so much for joining in. Arvind, so it's sounding really good because we've just heard so much rhetoric over the past 2 to 3 months that this de-escalation coming right from the top is good. I think the market's taking note. We've seen some sign of cash market buying, some short covering in specific parts of the market. How would you look at the positioning here in India, given the change at the political level?
Well, it certainly is quite encouraging that President Trump is saying good things. I'm still a little nervous that there's many a slip between the cup and the lip, and hopefully that's not going to happen again because India has been close a few times, and it hasn't happened. But I think enough tension has built up, and now it's time to de-escalate. And if President Trump is recognizing that, it's clear that Prime Minister Modi has been ready to take the step once President Trump climbs down from his, somewhat hawkish stance on India that he's had for the last couple of months. So I think that it's optimistic. It is obviously clear that FIIs have been avoiding the Indian market, and clearly you could see his inflows into the market. So I think there is room for a relief rally. But I come back to the question of what is going on with the Indian economy. Obviously, we had great GDP numbers in the June quarter, but we'll have to wait and watch some of the more important real-time data, whether it's in auto sales or it's in electricity demand or other measures showing that the Indian economy is starting to reaccelerate. And between the GST cuts and a US deal, maybe that acts as a shot in the arm for the economy to find its mojo again.
Right. Arvind and Neeraj, thanks very much. Good morning. Neeraj, how would you look at this from a foreign investor point of view? There was Mark Mobius who was broadly, I don't think he was putting this as the point in time when FI flows will turn, but as a broad indication, which Arvind also said, FIs have been avoiding India, they've been selling. And once this US-India thing gets okay and back on track, maybe it's a bit of an indication more than anything else, and maybe that will play out as well. What's your sense, Neeraj?
Overall positive. I do think we are at a turning point here. As Arvind said, you still have to be mindful about how it develops and how it gets resolved. But to your point, there has been some level of selling from the FIIs over the last few months. And I do think you will see actually a pause in selling, some reversal from a flows perspective. I would highlight one additional point. You've seen some level of outsourcing of putting pressure on India and China more from the perspective of trying to resolve the Russia-Ukraine. Now, President Trump has put it on EU. And I think this is not something markets are fully focused on. Given the slow but clear pressure building up, I think there's a possibility that in the coming months, you get some form or shape of resolution of the Russia-Ukraine situation, which again, when you think from India's perspective, whether it's geopolitical aspects or the security and the price of oil is going to be a positive. And I think there's a downside getting built in at this point for the potential for the crude oil going into the year and then next year. But the markets are not pricing in it at this point, given obviously you still have a lot of geopolitical issues. So I think the combination of flows and the backdrop that potentially will improve in the coming months, I think it makes me positive right now where we are.
Arvind, you're intimately familiar with what's happening in IT services. And that's one area where there are large shots in the system. And of course, additionally, there's been this fear-mongering about maybe services will be touched and taxed, although it seems completely unfounded. That should also, at least from a tactical perspective, get a bit of a lift, that space?
Yeah, I think there was a bit of a fear and a risk that does the US go after H-1B visas and try to disadvantage Indian IT outsourcing. And clearly, this should remove that overhang. And so absolutely in the short term, if that overhang has been part of the concern in the IT space, that overhang should go away. The longer term challenges remain, but I think the stocks maybe have had this short-term concern added to the long-term overhang, and the short-term concern should definitely recede.
All right. Hi, good morning, gentlemen. Good to see you all in. Arvind, do you think if a deal actually comes about, India could actually outperform after underperforming drastically for the last year or so? I look at MSCI Emerging Market Index That's up in double digits, more than 10%. India is down. MSCI India is down more than 10%. Could we get back to a market perform or even outperform in the next 12 to 18 months?
Well, I would come back to 2 points. One is that removing the trade tensions and the trade barriers that have crept up will certainly be helpful for part of the market, which would be the export-dependent economies. But I think the bigger question, which is why India has outperformed, not just in the last month or two when these tariffs have come, but longer term, has nothing to do with tariffs, but has to do with India's own somewhat disappointing growth numbers. And hopefully between the GST reforms announced by Prime Minister Modi and these tariff clouds clearing up, it gives a shot in the arm to the economy. And if that happens, yes, there's clearly a catch-up trade that can happen in the market. But we need to see the follow-through in the economy. And I think the 1-2 punch of these two things should hopefully help deliver that.
All right, let's hope, in fact, domestic economy as well gets its act together. In fact, there have been measures on ground, both fiscal as well as on the monetary side. Neeraj, the last time we chatted, you were saying focus on these domestic themes. Domestic consumption is something that you liked, as well as financials. That's got the much-needed boost, right? In the next 10 days or so, we'll reset to the new GST numbers. How are you positioned right now? And what are the themes you like when you look at consumption? If you could break it down a little bit.
So I would actually split it in 3 parts. The equity side, in terms of how you're thinking about it, I still stick to the sectors in terms of consumer financials. I'm still somewhat skeptical on if you see a rally in the IT services, because there are more structural themes in terms of the headwinds building up there. So I still think overall, the question, can India, from an equity market perspective, see a relief rally and also have potentially a catch-up? I think there is certainly a case for that, but the growth story will prevail post the initial relief rally. The second part, we didn't touch on this earlier, INR has actually underperformed the rest of the regional and the global peers when you think about the currency. And the interesting crosses you can look at, so Indian rupee is weaker by 3%, almost 3% this year, when the dollar has depreciated 10 against the majors. And I think there can be a little bit of a currency reversal here. Like INR has also outperformed Indo-Asian rupiah, which is going through obviously a different set of political issues. So I think there's a currency angle here, specifically from a foreign portfolio manager's perspective. And lastly, the RBI stance. I still think there will be room potentially down the road for RBI to cut, even though they had moved to neutral. But that will come with a pause.
Yeah, no, absolutely. Neeraj, good points there. Arvind, always great chatting with you. Thank you very much, gentlemen, for joining us here on the program. Let me just